Doubling down on the market. Hi, I'm Kevin Castaneda, and this is Kevin's Mindset. And today we're going to be talking about my personal bet on the market, my portfolio, kind of everything that's going on, and my thoughts on it. So if you do enjoy this video, go ahead and smash the like button as well as subscribe if you do want to watch more of my content in the future. Now we're going to get straight into it because I don't want to waste any of your time. So recently, and not even recently, since kind of 2021, we've been seeing this downfall in high PE, tech stocks in general. Like 2021 was a pretty good year for some tech stocks, but since like the December point of 2021, we've been dropping. Heading out of 2020 into 2021, we also saw a drop in kind of small caps and high PE stocks. And then we kind of saw this recovery throughout 2021, and now we're back to 2022, seeing the same drop again. Now I'm looking at a lot of these companies, and there's a really big difference between the kind of drop heading into 2021 versus the drop heading out of 2021 into 2022. So in the drop of 2021 in the beginning, we saw all these kind of crazy valuations, and we saw companies that just didn't make sense. And we saw a lot of these companies drop down because they had no path to profitability. They were kind of just bad companies. They were very speculative. They were newer companies. They were SPACs, etc. And we saw all these drops. And I think that this was pretty justified because a lot of these companies the valuations just did not make sense. Whether you're a growth investor, dividend investor, value player, whatever it is, these valuations did not make sense on a lot of these companies. But now in 2022, heading out of that drop that we just had in 2021 and the drop that's kind of consistently happening as we speak, I think that there's a lot of value here. And this is kind of the point where I'm doubling down because honestly, I started looking at the market. I was like, okay, Fed's going to raise rates. A lot of kind of bad news is going on. We had Omicron, which was the start of this drop. Then from Omicron, we had even worse inflation numbers. Then we had the Fed talking about raising interest rates, and now they're finally genuinely going to raise interest rates. Then they talked about offloading their balance sheet, and it's kept getting worse. And now we're kind of at this point where it's like, okay, some of these valuations are starting to get kind of nutty. Like you're looking at these companies and you're like, this makes no sense. When I look at PayPal and they're trading at like a 25 forward PE and like a 6 to 7 price to sales ratio, I'm like, all right, this isn't making sense anymore. When a company drops 35% after earnings, it's kind of insane. When you look at Facebook, when you look at PayPal, when you look at Square, when you look at all these other companies, you look at these valuations, they're starting to kind of get ridiculous. Because if you look at the fintech sector and you look at something like Square, you see, okay, they have a lot more growth, but their margins aren't quite as large and they're not as established as something like PayPal. PayPal has pretty good margins. They have relatively good growth in the double digits still. And so I'm looking at these companies and I'm like, okay, I'm starting to see these deals that are getting kind of ridiculous. So I'm starting to analyze these companies. And I think this is the main point of this video. Pay attention to the companies that you liked in the past. If you saw some companies that you loved their business model, you loved their vision, you loved their kind of their margins, everything about the business. Let's say you had huge conviction about this business, but you hated the valuation and you weren't willing to invest in them because of this valuation. Now's a great time to reassess your portfolio, reassess the companies you're in, reassess the companies that you wanted to invest in but couldn't because of their valuation. Because a lot of these valuations now are in a hole, and it's starting not to make sense. So once again, I'm reiterating this a million times because of the fact that it's really important for you to kind of look at these opportunities and say, okay, what am I willing to invest in? What do I want to invest in? And how am I going to go about doing that? So for example, me, PayPal, I love PayPal and I wanted to be in PayPal for a long time, but the valuation for me did not make sense. So I invested in something like Affirm, which also, now that looking back on it, didn't make sense either, but it was more of a growth play. And I still like Affirm, but they're not a profitable company. And in this market, it's a bit dangerous to be in a company like that. I still think they're a great company. I think they have solid fundamentals, and I think they're going to continue growing over the next couple of years. But I do see them as a higher risk play because we do head into recession. They're one of the ones that are going to get hit first out of all the fintechs because of the fact that they don't really do credit kind of searches. So they just kind of loan money to whoever wants it and they buy now, pay later, which is kind of their whole business model. But I see a lot of growth and a lot of value in the fact that they have huge deals that are just kind of starting to come into effect now with Walmart, Target, Amazon, and many more. So I'm looking at this as a huge value play, and I think that it's kind of being depressed to a level that's starting to become a pretty decent valuation at about $50 per share. But when you look at these companies that have been around for a long time, or even if they're newer companies, but they're posting great numbers and are doing a great job, someone like PayPal is really interesting to me. They're being affected by supply chains. They're being affected by COVID. They're being affected by all these different factors that I think are momentary factors. They're eventually going to go away. They're eventually going to subside, and their numbers are going to continue to grow. So looking at a company like PayPal that you see growth in, that you see kind of this potential and this huge brand that's going to continue to grow, I think that they're a great play, and I'm honestly very excited to start investing in PayPal. Now, Facebook's also a company, Facebook's a company I own. PayPal is one that I want to own. Facebook, I haven't built out my position completely. To be more transparent, I have about $5,000 invested. That's not my portfolio value because of this drop recently, but money invested, I've invested $5,000 into the market. Now, for me, that's pretty substantial. I'm 16 years old, I'm just starting to build up capital. I'm still in that growth phase of portfolio, obviously, and I'm kind of trying to look at the market and see, okay, what do I see? When I look at Facebook and I see their drop after earnings, when I see Google fly up because they're splitting their shares, and when I see Apple post great numbers and everything, I'm looking at Facebook and I'm seeing, okay, there's huge growth coming for Facebook. I think the biggest out of all the big techs. Why is that? Because of the fact that I think Facebook is going to continue to grow with the metaverse. I think that they're the only ones that are looking at this opportunity, whether it's with AI, whether it's with all these different things. And I think they're actually willing to shift. They're willing to kind of take the risk and take the chance of this huge market that's opening up. So I see Facebook as a huge play as well. And now they're starting to trade at these levels that are kind of ridiculous. They're trading at like 2021 levels. And I'm starting to get really even more interested than I was in them when they were in the 300s. Now they're in the 230s, 240s. And now it's starting to get to be kind of a value play, and kind of this point where it's like, okay, even if there's not huge growth, them just returning to their traditional valuation would be huge growth in kind of buying their stock. So I see that. I also own Enphase. I think Enphase is a great company. They're becoming more and more profitable. They're growing margins. They're growing revenue. Everything is kind of expanding more and more and more. And they're a company that's starting to build a huge foundation and kind of branching out more and more. And I think that they're going to be a huge player in the energy space. And they're the only ones that are really innovating to kind of have these different forms of providing some sort of energy, some sort of kind of alternative green energy play for the market. So I think that this is a huge opportunity as well, and I personally love them. Nvidia is another one. Nvidia is kind of one of the ones that is heading to be one of the big techs, and I think that they're going to be up there for a while. And a lot of the time they were just kind of being looked at as a chip company, but now they're heading into the metaverse with the omniverse, and a lot of people don't like the metaverse, and I understand that. I think that there's a lot of speculation in this space, but I think that if you go for solid companies that have other business models other than the metaverse, I think that that's a great addition, kind of like a cherry on top for their business models, and I think it could be huge in the future. But for now, yeah, it doesn't make a lot of sense to invest in companies solely because of the metaverse. But if they have an aspect of their business that is the metaverse, I'm honestly even more excited about those companies, especially if they have a genuine plan on how they're going to execute in that space. And the omniverse is huge for Nvidia because they're going to allow people, creators, entrepreneurs, engineers, etc., to kind of model and work on their whatever they're selling inside of a virtual world where they can look at these little mistakes, where the software allows them, the AI allows them to kind of fix these problems that might occur within the projects that they're working on. And I think that's huge, and I think Nvidia is going to do great in the long term. They already have over 100,000 people working in the omniverse. And I think that this is just going to continue to expand. They have a lot of great deals. If their deal goes through with ARM, I think that's even bigger for their AI and just kind of all these different things, all these different segments of their business. So I'm really excited for them. I think they're doing great. And lastly, or not lastly, but I also own Tesla. Tesla is a great company. I see them continuing to post great numbers. I think that they're going to do great in the long term. And I think that under $900 per share, it starts to get a bit kind of silly. I think that their valuation is starting to get kind of diminished to a point where I'm willing to buy more. In the thousands, 1,100, 1,200, I'm not willing to buy. 900 still a little but in the 850 and even lower, if you get to the 800s, 700s, 600s, I started my position at about 650 on Tesla, and that was huge. And I wasn't willing to build it up because of the fact that it just skyrocketed after I was up like 80% or whatever. But now I'm willing to definitely double down on that. I'm continuing to build out that position. And once again, reiterating, look at your companies, look at the companies you want to own, look at the companies that you do own, and look at their valuations, look at the company's growth rates, look at their 10Ks, look at what they're saying about inflation, look at what they're saying about supply chains, look about what they're saying on their future growth rates, on their future of the business model, and to see what's going on in the market, and definitely reassess your portfolio, reassess the market, and don't look at all the headlines. It's something that is very prevalent in the market, and that obviously I haven't been in the market for too long. It's been around 2 years now. But if you talk to someone who's been in the market for a long time, let's say we look at interviews like from someone like Peter Lynch or someone like Warren Buffett, they always reiterate the same thing. You get horrible news. There's horrible things going on in the economy. There's horrible things going on across the world. But if you just pay attention to the quality of a company, you pay attention to the quality of your investment, then over the long term, you'll be okay. Over the long term, it's going to be fine. Over the long term, you might even beat the S&P. You might beat the market. And that's the whole point of picking stocks in general. So look at those companies, look at their valuations, look at their growth rates, look at their whole foundation, and pay attention to your conviction on these companies. I think that's the most important thing you can do right now. And I'm definitely doubling down on my positions. Thank you so much for watching. Let me know what you want to see on this channel in the comment section down below. I'd love to hear those comments and to kind of pertain to those suggestions. So thank you so much for watching. Smash a like if you did enjoy this video, and subscribe if you do want to watch more of my content in the future. Thank you so much for watching. I'll see you in the next one. This was Kevin's Mindset.